Hello everyone and welcome into the channel. My name is Brent, and in today's video we're going to do a really quick video of the snapshot of the market today. We'll go ahead and take a look at some fundamentals of the Mag 7, the indexes, and take a look at the M1 Finance portfolio and kind of go over some of the recentness of the market. We'll go ahead and give my opinion on whether we're going to go ahead and trend sideways, move down further, or upwards, right? So definitely stay tuned for that. If you guys have any comments or questions for me, let me know down in the comment section below at any time. If you have a question that pops into your mind, drop it down below. Otherwise, give this video a big old thumbs up and let's go ahead and get started. So last year, we were in extreme greed territory of what, like 85, 90. Here within the last week, we were showing fear levels, extreme fear of ranges of 22. As of Wednesday, when President Trump came out with this list after hours and said, hey, this is going to be a higher than expected tariff rate, the market dropped off very sharply, going down 10.5%. Now, it fell really quickly from a rating of 22 down to a rating of 5 that I was kind of watching the last few days. Now, the Fed had their closed door meeting on Monday. They're expected to talk on Wednesday. Tariffs that have been pushed on Wednesday are going to be going into full effect on the 9th, so on Wednesday. But right now, the market's kind of deciding, hey, I found my bottoming out period at the moment. I'm at I don't know what's going to happen, so I'm not going to move right now. So the market is very unsure, investors as well, of what the market's going to do right now. Wednesday, it's going to kind of play a pivotal role, whether we stay here from highs to low at this 19.43% difference to the downside. So if we take a look here, from highs to low here, 612.93 all the way to those lows of what was the low? 504.38. 38. Right, from highs to low, we've dropped off 19.43%. That's almost 20% right there alone in the market. And we don't know what's going to happen. I think in the next week, it's going to play a bigger role to see what takes place in the market. I do see when we take a look at these companies individually that there's more downside, ahead of us. It looks like there's more downside ahead of us. If I look at the S&P 500, we had that 50-day just a few days away from crossing below that 200-day and having a bit of a death cross where, that would show much weaker signs in the market. But let me go back and look at the history here. But this drop off here looks more like 2020's drop off. So let's go back 10 years. So back in 2020, there was a huge sell off. We know what took place there in 2020. Very similar action here in 2025. We know what's causing this, right? We know what's causing this is tariffs. We know what caused this. It was the illness. And then the market eventually had that death cross. And that was essentially the bottom, and we recovered. Now, there are other times where death crosses have taken place, but these waterfalls aren't really a waterfall, right? It's a slow downside. We had that death cross here in early 2022. It wasn't until October, September where the market found a bottom and then began to trend to the upside. Here, we also have instances of that death cross, not quite at those lows, so the market continued to fall before finding a bottom and then trended to the upside, right? So, here in the short term, this hasn't had that death cross yet. We've had that waterfall effect, similar to back in 2020. So this could be where right now we're just in certain times. Wednesday, the Fed should make their announcement. The tariffs will go into full effect. We might get some counter tariffs on the United States, and we'll make the market could fall sharply from here, falling as low as 420, 410. So if the market does fall to 410, 420, it would be right here. Right here. October 27, 2023 would be kind of like the next support-ish area. So right now we've fallen to roughly April 2024 levels. So we've essentially lost a year of capital gains if you've been invested in the S&P 500. But if we fall down to say 410, 420 because of more volatility, that could add an additional 23% negative to the downside, right? If we fall from the highs of 416 all the way to those lows of 410, 420, that could be a 20 to 23% additional drop, total drop from highs to low. So we could see that play out here in the near future. Whoops. I'm not exactly sure what will take place. That's why I'm really kind of holding off right now. I would like to invest more capital, but at the same time, there's so much uncertainty out there in the market. And right now, we're kind of finding that support. The Dow Jones is kind of in the same shoe. It hasn't quite crossed over that death cross. It's still kind of just a little, it's a few days away, but potentially showing signs, but also has the same signs here. The 2020 had that waterfall effect, quickly recovered. 2022 had that long drip before it began recovering. The NASDAQ actually is in the death cross state. Oh, wait, no, it isn't. Not yet. Very close, though. So it's at 499 with that 200 day at 493. Okay, so not quite yet. But it could be pretty quickly, as many of the Mag 7 are actually showing signs of the death cross. So if we take a look at the 1 year here, oh, I know, I'll keep the 5 year here. Okay, 5 year, we can see here Microsoft from 2022 up until 2023 basically just trended to the downside. Here was that death cross here in early 2022. It was not until 8 or 9 months later after that taken place that the market began to show signs, or the stock, Microsoft, began to show signs of recovery. If we take a look at 10 years, if we take a look at these death crosses and golden crosses, you can see that generally it doesn't happen too often, but when it does happen, there's more negativity ahead for that specific company. As we said a couple weeks ago, Microsoft was already showing signs of falling off a cliff, right? It had that death cross indicator. And right now there's no end in sight. Right now, Microsoft could fall as low as 320, and that could play some weakness into the S&P 500 and the NASDAQ. NVIDIA, let's look at the 5 year. I'm just going to stay with the 5 year. The 10 year just makes it blurred out. It makes it really hard to see. Here we saw NVIDIA crossing that downside. So death cross here in 2022. It wasn't until 2023 where the 50-day crossed back over, showing that golden cross. It did spike a lot since then, but it is also death cross here in 2025. Fallen all the way below $100 right now. Right now, as I'm speaking, NVIDIA is at $102.42. So it's barely kind of sustaining itself here at this mark. But if Wednesday doesn't go well, right, if the Fed's going to come out and they're supposed to they're supposed to cut rates an additional 2 times this year. So initially, early on in 2025, there was 2 rate cuts expected in 2025. Now there's 4 rate cuts expected. So they had their closed door meeting on Monday. So I'm really looking forward to see what exactly takes place on Wednesday. This could move as low as $80 if it doesn't play out with them. Apple, they've actually crossed over. They've actually been much more affected than I thought they would. I sold all my Apple, both on M1 Finance and Merrill Edge, and moved it into Meta. They've been brutally hit. They had a high of 260, and now they're at 177. If we look at the chart here, year to date, Apple is down 28% year to date right now. That's a huge hit. They've actually crossed into the negative territory. They've recently hit that death cross, and this is showing support right here at 177. But if this doesn't hold out, they could fall down to say 140, 150ish, right? So they're actually hit a lot harder than I expected. Amazon here, Amazon fallen off quite a bit. They still have a little bit of room to go before they also hit that death cross. They're showing signs of support here at that 174, but if that doesn't hold, they could fall down into the 150s. Tesla has been brutally hit. They're down 40% year to date. Yeah, 42% year to date right now. Not quite at the death cross because there's so much volatility here, but Tesla is being hit both politically and company, right? Their numbers were not great financially, and then with Elon Musk in the political side and having a lot of negativity against the company itself. That has not helped the company's reputation here. Stock price, share price, cars themselves, right? The vehicles. So they're not quite at that point, but they could soon be. So it's showing a lot of signs to the negative side. When I'm looking at these individual companies that hold 30% of the S&P 500, 30, of the 30, they hold 30% of the S&P 500. They're quite a bit more within the Nasdaq. So here, Google is actually very close, just within a few, probably a day or so. Depending on how Wednesday plays out, Google may also have a death cross here and continue falling from 149 all the way until say 130, $120 range. Even Meta, which doesn't, they don't buy a whole lot of things and are not heavily affected by tariffs, are down quite a bit at 516. This seems to be holding steady, but if it doesn't hold, the next drop off could be well below what, $400. That would be really tough to see. So I looking at these companies and knowing that right now there's a lot of uncertainty in the market. So in my opinion, there's still a lot of uncertainty out there, which hasn't been, I don't know if it's priced into the market yet. There's a lot of negativity already priced into the market. Tariffs and companies are already out. Companies are already trying to readjust their prices for the year, that the tariffs are going to be here long term. I don't believe the tariffs are going to be here long term. I think that they're just being used as a great bargaining tool to bring countries to the table to make an agreement that'll be beneficial for both sides. And that once this all plays out, the market will find its bottom and begin trending to the upside. But right now, there is so much uncertainty between not only the administration, but the rates, the Fed rates. The companies themselves, for the most part, haven't changed financially a whole lot besides tariffs, right? But again, that's the main driving factor here in the market. So taking a look at the M1 Finance portfolio, this is the last piece I wanted to hit on. Everyone kind of likes when I do showcase how this portfolio has been doing. This has been one that we made here on the channel back in 2018 and added to it just slowly over time. I stopped investing in this thing back in 2022. You can see the last time that I touched the portfolio was back in January 2022. In that time frame where I didn't do anything to it, right? I didn't invest a single dollar to this account. I didn't add anything. It continued to grow and nearly 2x from, oh, not 2x, but 43,000 to a high of 62,000 roughly. It has pulled back here quite a bit within the last month and a half or so, right? It is down in the last 1 month, 13.17%, where the market in that same time frame is down 9.64%. So it's been hit, I feel like, quite a bit harder, it seems like, right? Interesting. Year to date, it's down 9.22%. If I take a look at the year to date of this portfolio, it's down 13.36. So that's interesting that the 1 month is down 13.17 and 9.64. Interesting. I don't know if that has anything to do with how I reallocated the funds or something different. So back on March 14th. So March 14th, when the S&P 500 had already fallen quite a bit, right? March 13th, we found that initial bottom. The market had sold off roughly 10%. I wanted to go more risk on. So I had been holding onto SCHD, which hadn't broken as far as 10%. And I transitioned to VU to be a bit more risk on for the recovery to the upside. And I don't think I'm as low as it states I am. Or maybe I am. But the S&P 500 has done an additional, wait, I bought on the 14th, so right around here. It has done an additional down, oh wait, I did not capture that, huh? roughly 12% to the downside. Okay, so yeah, it seems right. Go back to the portfolio. Yeah, okay, that seems about right then. From when I started buying this position. Okay. Yeah. Okay, so activity wise, I sold out of all my individual companies. So I sold 8. I sold all 7 of my individual companies, and I sold ACHD, that's my ETF, and I consolidated all into VU. That was back on March 4th. And then I haven't touched this portfolio since then. I don't plan to invest more into the Roth IRA at this moment. I did invest more into the taxable accounts. I put a few thousand into those during this downturn, and then been reinvesting all the dividends that have been paid out into those accounts back into itself, just buying back more shares. So yeah, that's kind of the game plan right now. So right now, I'm really looking forward to what will take place on Wednesday. I'm hoping that the Fed will come out with some positive information. I'm hoping that more countries come to the table to make some agreements, because I'd like the market to kind of bottom out here. I don't want to see the S&P or the other indexes fall from this point even further, because the next point that this could reach, right, as I said, could be $410, $420 range, which would be an additional drop off from here of roughly from highs to lows of roughly 23%. So from right now, the market will say is what, 516, 504. Okay, 504. Okay, that's right. Okay, so from here, if the market fell from 504 to 410, it would be an additional 20% drop off. Did I do that wrong? Let's see. Okay. So highs was 612, current is 5s. If we went from high to low and that next drop off would be roughly 410, 420, that would be a difference of roughly 39%. So yeah, that could definitely happen, right? It could happen. I don't know if it'll happen, but I guess time will tell. We'll see. Let me know down in the comment section below. What do you guys think? Do you think the countries will come to an agreement here shortly where tariffs will be lifted and the market will recover? Or do you think this thing will play out long term and we could fall into that 40% range? I think it'll be an exciting few months regardless. Regardless of what happens. We can see here, I thought I had the other one here. Yeah, right now on Tuesday, it's been dipping, right? Here's when I first started making this video, and then I've been kind of refreshing this page over the last, 30 minutes or so, and it's not doing well. And it's kind of losing all of its gains that it did have on the day. It was up nearly 3% at open, and now it's losing all of that. So I haven't been keeping track of what exactly is going on out there, but I'm sure it's not good. Apple is now in the negative by 1.32%. So, whereas they were green earlier in the day. Okay, I think that's a good point to go cut off this video. Again, if you guys have any comments or questions for me, let me know down in the comment section below. If you guys would please share your opinion as well. Do you think the market will show a support line here? Do you think we'll have more downside in the future? Would you be comfortable losing an additional 20% in your portfolio? Let me know down in the comment section below, and I will see you guys in the next video. Bye-bye.